Today I'm going to be showing you guys the exact strategy that has been producing me a 78% win rate every single New York Open session, every single day consistently. And today I'm going to be walking you guys through the entire thing step by step so that you guys could start applying this strategy tomorrow morning. Now, before you guys think this is just another trading strategy video, another YouTube video where it looks good on the charts, it looks good on paper, but when you actually start trading it in the real markets, everything falls apart. Listen, I hear you. I've been there before. I've watched all the videos that promise high win rates, simplicity behind it, but then when you actually sit down in the charts, you're confused because you don't actually know what rules you're following. You sit down on the charts and none of it works because the rules aren't clear enough to follow. So let me be upfront. This is a rule-based strategy. It is a checklist that you need to follow step by step. Either the setup is there and you trade it, or it's not there and you don't trade it. Even though I have multiple trading models, this specific trading model is the most perfect one if you are looking to become a mechanical trader and you need a checklist to go step by step by step. And if you're thinking, I don't have time to sit at the charts all day, I have responsibilities, it does not matter because this setup happens only in the first 90 minutes of New York Open. Now, what gives me the credibility to actually go over this strategy and convey it to you guys? I'm super blessed to be a multi six-figure funded trader, have multiple five-figure payouts from Top Step alone. I was a top 50 trader at Top Step, and alhamdulillah, my students, Navi, Steven, Aaron, all of them are passing their evaluations, getting funded accounts, getting payouts consistently. Alhamdulillah, not only did I have my personal record last month, but my student Aaron also had his biggest month ever. So by the end of this video, I'm going to show you guys the full strategy, the 3-step checklist that I use every single day, both entry models and real trade examples so that you guys can see exactly what this looks like on a live chart. All right, let's get straight into it. So most of you guys have tried strategies that looked promising, they back tested well, they made sense on paper, they had logic behind them, but they never worked consistently. And the reason isn't the strategy itself, it's the vague rules that you have, the fact that they're not clear set of rules, and that creates room for emotional trading to fill in the gaps. When the rules aren't crystal clear, your feelings start to make the decisions. That makes completely sense because at the end of the day, we're human beings. We're emotional people, right? We're emotional creatures. So this is exactly why I built something with a clear checklist. Either all 3 conditions are met or you don't trade. That's it. So now when most traders see this trade setup, they think that this is just an entry model and you see the little steps, you see that I entered off of a normal fair value gap, but that's where you get it wrong. With my checklist, this follows completely. As you can see over here, the last thing on my checklist is an entry model. This area right over here is my entry model. But as you can see, we have 2 things, 2 criteria that need to be met right before that. We need a DOL, which is draw on liquidity, and we have a higher time frame bias. Now, these 2 things need to be in place before you can actually ever have the entry model, before you're ever entering into any trade. But the reason why a trade like this always works and why it's so repeatable and why the New York Open specifically is because during those first 90 minutes of New York Open, that's when we have the most volatility, the most volume. Price action is ideal and going clearly to these DOLs. The main thing that we are targeting with our entry model is our DOLs. And how do we know where our DOLs? Well, our higher time frame bias confirms it. You see how all of them work hand to hand together? If you just try and use an entry model without DOL and without higher time frame bias, your win rate is probably going to be a 50% or maybe even less than that. And the reason why I say you want to trade during New York session in the first 90 minutes specifically is because we have that volatility, that volume where price action is actually clear and these entry models are actually going to be respected. So now let's get straight into it, right? So the higher time frame bias. Higher time frame bias is key. A lot of people, they like to zoom in into the 1 minute time frame, see the first fair value gap and then long or short off of it and then wonder why they get stopped out. You always have to zoom out because the higher time frame is going to hold more power. So as you can see right over here on my chart, we have a 1 hour FVG marked out. We have a 1 hour FVG that's being respected. Price came over here, we tapped into it and then we shot up from it. That's how we know that this hourly FVG is being respected, and we can right then and there let us know that our higher time frame bias is bullish. Now let's get to number 2, the DOL. DOL, all it stands for is draw on liquidity. Straight up, what is our draw on liquidity? For this example, we have these data highs. We have a very big wick right over here. When we have these wicks, keep in mind this is on the 1 minute time frame. Price likes to leave this alone, then later down the line we like to target it. As you can see, this happened pre-market, before New York session, before market open. Now, why is it a coincidence that we take out this level of liquidity during New York session? That's why it's so specific to trade during that first 90 minutes of New York Open. So now that we have our draw on liquidity, we can finally look at our entry model and we can finally have that 3-step mechanical entry model that I was talking about earlier. Now, I know I briefly went over higher time frame bias and draw on liquidity, but I've made multiple videos. Make sure you guys check out those videos where I go more in depth and more in detail covering those topics. Now, right over here, we have our entry model, but I know this is confusing confusing. So let's honestly let's get into the step by step before we even approach these live markets. So the entry model that I'm most interested in is called my SMR entry model. The SMR entry model has 3 steps. And look at it. SMR is how many letters? 3 letters. So the first step is S, the second step is M, and the third step is R. All the S stands for is sweep of liquidity. When we have the sweep of liquidity, where is liquidity? It's just resting money, resting orders above highs and lows. So for example, we have a high over here and then we have a low over here. Literally all liquidity is resting right below this low and right above this high. All we're waiting is for price to come and sweep it, come down and sweep it. That's all we're waiting for step 1. Now for step 2, what it stands for is market structure shift, or MSS. Now a lot of the times the market never just moves straight up and down. We actually have, lower highs, lower lows, lower highs. So all the market structure shift is when we sweep liquidity. So we have this low over here, we sweep this liquidity, and then price takes out a high. Instead of not taking out a high, we create a higher high with displacement, and that right there is your market structure shift. So you see how we took out the liquidity. So step 1 just happened, sweep of liquidity, and then we had the market structure shift right over there. Now we have the third and final step for the entry model, which is the R, and we have the FVG. But not just an FVG, it's a return to FVG, to a fair value gap. 9 times out of 10 on the leg that creates the market structure shift. So right over here, this is the leg that created the market structure shift. We're gonna have a fair value gap, a bullish fair value gap. So all we need to do is wait for price to return into this fair value gap, and that's when we can have our entry model. And that's it. Super clear, stupidly easy, and stupidly simple. So I know I kind of rushed through this, but feel free to rewind the video and rewatch it. But now I'm going to show you guys on the live charts step by step before it even happened. So now we're on the actual live charts right over here, and we have our checklist. Keep in mind, you have your higher time frame bias already. You have your drawn liquidity already. Now you're just looking for your entry model. So honestly, we could just erase this. Let's wait. So right now we're waiting for a liquidity sweep for step 1. So let's see where we can get our liquidity sweep. So right now I see that we have this low right over here. So I'm going to wait for price to sweep out this liquidity, and hopefully we get a liquidity sweep. All right, let's play it out. And bang, right there, price took out liquidity. Beautiful. Let's rewind that a little bit. So we just swept this low right over here, and now we have step 1 complete. So we could actually mark this out as our liquidity sweep. Let's mark this out. Step 1, sweep of liquidity. Now, what are we looking for? We're looking for step 2, which is a market structure shift. What is a market structure shift? Remember what we said down over here? All a market structure shift is when we take out a low, we sweep a liquidity, and then we take out a high with displacement. So let's get back to it. This was our low that got swept. Now where's our high? Well, our obvious high is going to be right over here. This is where we're going to want price to go to and take it out with displacement and see if price takes it out. Hopefully we get it. And now we wait, and bang, right there, the very next candle, we get a beautiful market structure shift. The candle closes and we create that. That right there is what we're going to mark out as our market structure shift. So now step 2 is now completed, and we can mark it out in real time as these candles are printing out. Now guys, remember, what did I say? 9 times out of 10 on the leg that creates the market structure shift. What is the leg? The series of up close candles that create the market structure shift. There's going to be a fair value gap left behind. So this is the leg that got created and that created the market structure shift. And right over here, we have a bullish FVG. Bang, bang, and right there. Now we can mark this out as our bullish FVG. But remember guys, the entry model is very mechanical. It's not once we see an FVG, we can enter into our trade and we're going to put our stop loss all the way over here. That's a huge stop loss. We need to wait for the R, return to FVG. So now we're waiting for price to return into this fair value gap, and then we could enter. All right, let's wait. Let's play it out. Okay, did price return into this fair value gap? No, it didn't. So we're still waiting. There's no entry yet. And bang, right there. So let's rewind a little bit. Price tapped into this fair value gap. So now you can actually enter into your position, click buy, put your stop loss at the lows, and then put your take profit at that draw on liquidity that you have. Remember guys, that draw on liquidity is very important. Right over here is our draw on liquidity. Let's actually mark that out. Right over there is our draw on liquidity. We enter into our position. We have our stop loss at the nice low that created the liquidity sweep. And that's as mechanical as it gets. We just followed all 3 steps. And now let's see how it plays out. Let's actually press buy right over here. We'll put our stop loss at the low over here. Put our take profit at these highs over here. And one thing that I want you guys to know to make this really consistent is once you take out the internal high, you will move your stop loss to break even. So where's the internal high of liquidity? Well, right over here is a high and liquidity is resting there. So this you would mark out as your break even point. So when price comes back up and takes it, we'll go break even there. So let's play around. A little drawdown never hurt anybody. We're waiting. and then price slowly shoots up, and right there we can move our stop loss to break even. So now it's a completely risk-free trade. We go like that, and we're just waiting for it to hit our take profit, our draw on liquidity, and hit our take profit beautifully. That's literally as simple as it gets. Very mechanical, very step-by-step checklist. So remember, you guys need this checklist, the higher time frame bias, the DOL, and then the checklist within the entry model. So SMR. Make sure you guys take this notes. Now guys, remember, this is a 78% win rate. So there's not always going to be wins. It is not a 100% win rate. Anybody who says this is a 100% win rate, they are completely lying. This will not always win. And you guys have to understand that there's going to be losses, and it doesn't mean you necessarily did anything wrong. And I'm going to show you guys a perfect example of where this exact same strategy happened the next day. It didn't work out, but that's just because trading is all about probabilities. So here's an example where probability actually plays out and it's not always going to win. As you can see, we have our liquidity sweep, our market structure shift, the same exact setup from the example that I showed you previously, but this one actually ended up losing. Now let's go over why. Well, now let's actually break it down in live time, just how we did the other one. So let's go into replay mode and we'll start right over here. So what are we waiting for? The first step is to look for that sweep of liquidity. As you can see, we have our low right over here. We're waiting for liquidity to be swept from the low, and bang, right there we got our sweep of liquidity. Now we're looking for a nice market structure shift. So step one just happened right over there. So let's mark that out. Step one, sweep of liquidity. And the whole reason for me showing you guys this is to show you guys that it's not always going to win, but that's not wrong. Just because it loses does not mean you did anything wrong. And this is a perfect example. So once we take out this high over here with displacement, that's going to be our market structure shift. So let's wait for a little bit. Let's wait for a little bit. Bang, right over there we have a beautiful market structure shift. So now step two is completed. Market structure shift, and now we can mark it out. Right over here was our step two MSS. And now remember guys, remember what I told you, 9 times out of 10 on the leg that creates the market structure shift, we're gonna get a fair value gap. So as you can see right over here, we have a nice fair value gap right over here, and that's, you could wait for price to return to this fair value gap, and that will be your entry model. So you could actually enter your position once price taps back in. You could put your stop loss at the low that took out and swept the liquidity, and you could target the highs over there. So now let's see what happens when price retraces and returns into that fair value gap. So we're just waiting for our entry, and right there, so let's actually go back a little bit. So right over there price did. So now I'm going to enter my buy position. It filled me a little bit lower. There's actually a fair value gap down here over here, so we could actually mark that over here too. We could actually have this be our entry if you wanted as well. Put our stop loss at the low and our take profit at the highs, and let's see why this didn't work out. And bang, stop loss got hit right over there. There's no reason why this didn't get hit out. Guys, it's not a 100% win rate. I'm telling you guys this so that everybody will tell you that they have a 100% win rate, a super high win rate. Will anybody show you how it looks, how the trade looks good and it still loses? I'm showing you guys that right now. Understand that this is completely normal and I'm okay with this. There's nothing wrong with this. I followed my stupid simple checklist. I followed the 3 steps, step 1, step 2, and step 3, which was the return to the fair value gap right over here. And it's as simple as that. What's crazy is that I actually took this trade and I actually ended up taking a loss, but look what happened after. Price actually ended up hitting our take profit. And this is completely normal. You shouldn't get FOMO from this. You shouldn't get emotional from this. Just because these rules and this entry model, as mechanical as it is, it's very simple for beginners and intermediate traders because it's the mechanical aspect of it. If you like it, you have to follow it and let probability play out. So yeah, guys, this is the example. We have very literally exact same style, exact same trade, but this one won and the other one didn't. Now guys, even though I just showed you a 78% win rate model, most of you guys are still going to find a way to consistently lose because there's only going to be 2 steps out of the 3 steps met, and you're still going to take a trade and you're going to lose, and then you're going to be upset with yourself because you're wondering, why did I lose? And then you're going to start and want to revenge trade, get emotional, over leverage, try and make back your losses, and before you even know it, your entire account is blown. And I'm telling you guys this right now, the strategy is not the problem, it's the execution framework. I gave you the exact step-by-step plan, but most of you guys are still not going to follow it. And you've probably fell victim to this before, where you watch a YouTube video, you see that it works a couple of times, but then the second it doesn't work, you just completely abandon all rules and you revenge trade and you just go down an emotional spiral, you go on tilt and nothing ever works out. And the reason why I say this is because I have multiple students who have come to me with this exact reasoning. A lot of the times they don't even have a strategy problem, they have an execution problem, they have a discipline problem, and they just can't execute their strategy consistently. So if that sounds like the person you are right now, I do have my hidden edge mentorship where you guys saw the results results from the beginning of this video by students getting consistently funded, getting consistent payouts through the same exact framework that I work, through the same exact framework that I use and teach, and you want that full framework and also be held accountable by somebody who's actually done this and gone through the process, just apply. You don't even need to join, just apply, see if it makes sense for you. It's available for you guys if you're finally ready to stop figuring this out alone. But that's gonna be it for today's YouTube video. Hope you guys enjoyed. Make sure you like, comment, and subscribe, and I'll see you guys in the next video. Peace.